Hello and welcome to episode 318 of the Money to the Masses podcast with your resident expert, as always, Damien Fay and me, Andy Leaks. Damien, welcome back. How are you doing?
I'm good. This week, well, since the last show, I celebrated my birthday, so I had a day off work along with my twin stroke clone, Justin. We had a pub lunch, which is something that's very novel. If you're listening to this episode in the future, you'll be thinking, why is it so novel? But obviously in COVID times, sitting outside in the freezing cold to have a pint and a burger and chips is a novelty at the moment. So no, it was good.
And of course, listeners may or may not know that your birthday and your brother's birthday, it's not just your two. I mean, it's full of birthdays, your family, isn't it? Because you've got to share it with someone else, which is always a bit of an issue for your brother.
Well, yeah, it's my nephew, so Justin's son, so also happens to have been born on exactly the same day as us. So whenever it's my birthday, I'm sharing it with two other people, two of the closest relatives that I have, which when we laugh about it, but people say, what's it like? Well, I can tell you it's rubbish because you're constantly having to wish someone else happy birthday. And as he pointed out himself, that's Justin, that he has to spend his birthday at like a children's party. So it's probably not the way he would have wanted to spend a birthday at a children's party, but it's not dissimilar for me. So they're slightly different. I've not known what it's like, obviously, to not share a birthday, being a twin. But as we seem to be progressing through life, we seem to be sharing it with more and more people.
Yeah,
so
that's not fair, is it? It's just not right.
Yeah, but we did have two cakes in the office, didn't we? So that was very kind of you guys to get us two cakes. And we actually sided with we didn't go for Colin or Cuff. Well, who did we go for?
So there's Colin and Cecil. If you've been watching the news, quite funny with the various different supermarkets fighting over rights for the name. We went for a Cuthbert, which was a Waitrose option. We can mention them. Yeah, we're not sponsored.
No, Cuthbert. Was it Cuthbert you said? Yeah. Cuthbert Caterpillar Cake. Yeah, there we go. So no, it's been a good week. So what is on the show? I'll tell you. This week we've got some news came through about Barclaycard cutting people's spending limits, so their credit limits overnight, seemingly for no reason. So I wanted to discuss that, but more importantly, what to do if your credit limit is cut on your credit card. I also had a really interesting question about investing in the ARK Innovation ETF. Now, it's an ETF that's only available in America, and it's got lots of headlines because of the stellar performance. But I want to talk more widely about how you go about trying to find an alternative fund to one that you're probably wanting to invest in but can't for whatever reason, and how I would go about finding a UK alternative. And finally, I want to do a very quick piece on the female state pension. There are a whole bunch of women. In fact, there's 200,000 women who have been underpaid their state pension to an average of about £13,000. So they're huge sums of money that they're owed, and I want to discuss that because they probably aren't aware and they could be in line for a windfall.
Good stuff. And Damien, just before we start on the main topics of the podcast, I've just been shouted at across the room from Justin. He's listening from afar, and this is the beauty of editing as well. I got the names wrong, and this is how confusing this whole rights issue is about Caterpillar cakes, and even we've got it wrong. So apologies. Cecil. We ate a Cecil cake was Waitrose. Cuthbert is the Aldi version. And this is why probably M&S have such a problem.
I didn't even like it anyway. It's chocolate cake. So on with the credit card piece. So what to do if your credit card limit is cut. Now, Barclaycard, it was news this week that they had cut a whole range of customers' credit limits overnight. And you saw headlines probably saying they had been a 95% cut. Now, what had occurred is Barclaycard had decided to reduce people's limits, but not, it seemed, relating to their own personal circumstances. That was according to obviously the people quoted in the press saying there was no reason that they could see why their limit had suddenly been slashed. Now, Barclaycard came out and said that the reason why people's credit limits had been reduced, or some people's had, is because they're taking into account the changes in the economy and therefore the impact of customers' ability to manage their borrowing effectively. So in other words, after we've had the pandemic and the economy is still recovering and some people's finances are obviously still under strain, they've reviewed their overall risk and they've started to make adjustments to that risk, and therefore some people unfortunately will find themselves having their credit limit reduced despite the fact they've never missed a payment and they've been very good borrowers on their credit card. So Other credit card companies have come out and said they're not going to do it. But really, this just shows you that there is a move that some companies will start perhaps reining in their exposure to credit. Because don't forget, last year was one of, I think, the record years in terms of repayment of debt. Lots of people had more money because of the pandemic. There were people who were struggling, but there were certainly people who were saving money from not commuting and spending on going out. They used that money to start to pay down debt. Well, now obviously credit card companies are reassessing the situation and maybe making adjustments. This piece, what I want to do is just talk more generally about what can you do if you have your credit limit cut and you're not happy about it. Now, obviously, it's not necessarily a problem for you if you weren't using the card. So if you're not using the card and they start to reduce the limit down, you may think, well, I was probably thinking about closing it at some point, maybe, and therefore you're not so bothered. But there are potential issues if a credit card company does decide to reduce your credit limit. And one of those is it could start to impact your credit score. So credit scores, there isn't a universal credit score. What happens when you go to borrow money, lenders will do a scoring system and come up with a decision whether they're going to lend to you. And that decision or that credit scoring is based upon your credit report. And now you can go to one of the 3 credit agencies out there. So there are people like Equifax, for example, and you can get your credit report from each of them. It's always good to do that once a year. It's part of the Damien's Money MOT to do that once a year, just to check there's nothing crazy going on there. No one's taking out credit in your name and there's no mistakes. Because the thing is, when you go to get credit, that's when, if you get turned down, you find out the problems, and it takes typically about 28 days for anything wrong on your credit file to be rectified by the agency. So if you're thinking of going to get a mortgage or moving, it's definitely worth trying to check your credit file a couple of months before you do that, at least, so you don't have any problems. But one of the parts of credit scoring that occurs is this idea of credit utilization. Now, go back to podcast 258 because I did a whole piece about this concept. Very simply, if you think about all the credit you have available on credit cards, and then you think about the amount that you're actually using, that ratio is called your credit utilization. So to keep it simple, let's say you had 10 grand of available credit on your credit card and you were using £2,500 of that, then you'd have a utilization ratio of 25%.
Yeah.
And now, generally speaking, I've seen lots of different numbers, and I talk about it in the podcast I mentioned, 258. We will put a link to the show in these show notes. But somewhere probably around 20-25% is a decent level in terms of utilization. If you go way above that, that can start to be viewed that you are perhaps not managing your debt levels well, you're getting right up to the limits, for example. Then if you were going to lend to somebody, think of it like your friend. If you were going to lend your friend some money for a day or two and they were really struggling with debt, you probably would be less inclined to do it, or certainly lend them less. It's no different really when it comes to consumer credit. So one of the issues potentially that if your credit limit is cut, then your utilization level could go up. Now, that might potentially cause you problems when you're trying to apply for credit in the future. Now, I have to say, though, that there are lots of moving parts to when you're applying for credit and when they're looking at your credit report. So this is just one small part of that puzzle, but it's something to bear in mind. Now, what can you do if you're not happy with that? Well, of course, you could, theoretically, if you're worried about that utilization level, you could, in theory, increase the limit on another credit card you have. So your overall utilization remains the same. You might want to think about whether you're going to do that. But with anything when it comes to your credit, if you start to make changes, then inevitably it could have an impact down the line. For example, people might think, well, I'll just go and take out another credit card. And if you do that, don't forget that that's going to have an impact on your credit report. There's going to be a footprint. So when you go to borrow money and the credit card company or loan company or mortgage lender looks at your credit report, they see exactly the amount of credit that you've got potentially available to you and how much you're using. So you keep taking out credit and having hard searches on your credit report will be viewed as a negative, because don't forget they're trying to assess the risk that you pose as somebody who's going to borrow money from them. So you need to be aware, if you're thinking about applying for a mortgage in the future, you don't want to do too much that's going to impair in any way your credit report and any potential scoring. Of course, the one rule of thumb is if you are thinking about taking out credit cards, then there are eligibility checkers on most of the sites out there, and they do soft searches on your credit report. So you just go and see if you would potentially be able to get a credit card with the company. That's very different to applying for credit. And so it leaves a soft search to say that you did check to see if you could get credit, but you didn't do any more than that. And so that wouldn't be seen as a problem when compared to actually just keep taking out applications for more and more different credit cards. Now, overall, if you're unhappy about having your credit limit reduced, you can go to the credit card company and challenge that decision. Now, you may have to provide financial information to prove why you could afford or how you could afford to have a higher credit limit. Now, that might be the simplest route for most people, and the decision may be reversed. But of course, there is the potential, if you're unhappy, is deciding, right, I've had enough of this credit card company. I'm going to close this credit card. Again, I talk about how to do that in episode 258, and you go and take out a new one. As I say, bear in mind, if you're going to apply for any other credit in future, use eligibility checkers. But one other throwaway point just to make before we move on to the next piece is you may have got the ump with that credit card company and want to cancel it. But if it's a really long-standing credit card, there is a case that the longer you are with a bank or perhaps any credit card, that is a positive on your credit report because you've had a long-standing relationship with these financial institutions. So if you do start to cancel credit cards or close bank accounts, as a rule of thumb, it's better to close something that's more recent. If you have a choice of one or two, to go with the one that's more recent, because they do look at the age of any credit lines or bank accounts that you have. So the message is, if your credit limit is cut, there are things you could do. And also, if it is cut and you're not really that bothered, just bear in mind that, what impact it might have on something called your credit utilization.
Okay, so moving on to the next piece, we're talking investing. And Damien, you had a question, didn't you, about a particular fund in America and how that can be accessed in the UK, because it's pulling up trees. People are loving it.
Yeah, so if you're into investing, you may have started to hear the term ARK, so ARK. So ARK Innovation ETF is one of the ETFs that's run by somebody called Catherine Wood, and she is a bit of a darling of Wall Street and has been a successful money manager effectively. And the reason that she's gained a lot of attention is because if you look at the last year, the ETF that I just mentioned, which invests in disruptive innovation, so sort of technology, has returned 175%.
Wow.
Now, you've got to think that I'm making this number, I'm talking about, it's April now, end of April. Go back just a year, we were only just coming out of that market low after the crash. So pretty much any equity type fund that you will care to look at has made about 30 odd percent if you go from the low to this where we are now. But there's no two ways about it. That's eye-watering returns. Now, like I say, she invests in disruptive innovation in this particular ETF, and the type of company are things like Tesla. So Tesla accounts for 10% of the ETF's assets. So that gives you a feel for the type of company that they invest in. Other ones within the top 10 holdings include Zoom. We all know who Zoom is. We wouldn't have done probably a year or so ago, but we all do now. Shopify is another one. And so, as I mentioned, the returns have started, obviously they gain a lot of reputation and a lot of money in America. And it's not just last year. If you go back over a 3-year period, then the return is 47% annualized. So you're sitting there thinking it's a key point is it's annualized, and it's 46% over 5 years. So you can see that people who've invested in this particular ETF have made a lot of money. Now, the reason they've made money is because of the type of investment that it is in, like I say, disruptive technology. And it has been a real growth-orientated market rally, hasn't it? We talk about it on midweek markets. So you can see that people are attracted. But go back to February this year, so mid-February up until sort of early March, then the fund fell 30%. And that was when a lot of the headlines came about. And you may have started to see Catherine Wood's name appear because people were sitting there thinking this is all imploding at the moment. It's all going wrong. The market has since stabilized. But the reason it was going seemingly wrong is if you listen to midweek markets, there was the rotation out of growth stocks into cyclicals, into value. So we were going from a market where growth, which has dominated over a number of years, started to underperform more cyclical areas of the market. So think things like financials, for example. And therefore, this fund had started to tumble. But obviously, people are attracted to this type of returns. And if you are keen in investing in technology, big tech stocks, then I can understand why people are looking at it. The problem is you can't buy this ETF in the UK. I've not seen any way that you can. And the question I got was actually off the back of this person wanting to invest, but wanting to look for something that perhaps was a UK equivalent of this particular fund. So it raised this question of how would I go about finding an equivalent of any fund that existed out there. If there was something you really liked and you're thinking, I would like to just be able to buy that in my bog standard stocks and shares ISA with Hargreaves Lansdown, Fidelity, whoever, how would I go about doing that given that I can't purchase it directly? It's not listed. And so what I did is just follow a very simple process, which I'm just going to run people through to try and find a fund that was doing something in the vicinity of this particular ETF. So there are a couple of free sites out there. TrustNet is one of them. Morningstar is another. And one of the best things you can do is go and find the fund that you're trying to emulate on either of those sites. Now, TrustNet is far simpler to use. There's not much data really on there other than some of the performance data. You can get nuances about bits and pieces like beta and stuff I've talked about in the podcast before, but Morningstar really goes to town on the detail. Now, if I stick with TrustNet so people can get used to using a site like that, what I would do is I would go and look at what the ARK Innovation ETF had done. Now, you only find that on Morningstar. You won't find information on TrustNet because TrustNet is only dealing with the UK. And I would therefore look at the equivalent sectors. Now, if you go onto TrustNet, you can go and do a fund screen where you can decide to split the list of funds down by sector. Now, TrustNet is a global fund. It will vest anywhere. So I went and looked at the global equity funds. That reduces your universe down from 2,500 down to, say, a couple of hundred. Now, you can do this with just unit trust. You can do it with investment trust. You can do it with ETFs. You'll have to probably do it separately for each, just because of the way a lot of these tools work. They treat each type of fund separately. They're in like different universes. But then I would look at the asset class. So I'd click the screen and make sure it's only an equity fund. And in this instance, I was looking at unit trust. That would give me all the funds in that universe that were global that I could buy. And so you could do a similar thing on your platform. Now, the quickest way to try and find a fund that does something very similar to the one that you're looking for is to look at performance. But I would normally go and try and find a bit of a peculiarity in the performance. So something that has, like, for example, a stellar return of 175%, if you rank all the funds by 1 year performance, you know the ones that are going to be sort of 10, 12, they're not investing in the same things as Catherine Wood is. So you're going to be looking for a fund that's doing 70, 80% in a year. But equally, look at the chart that you've seen for the fund that you're trying to emulate and look at the flows of it. Look at how it's gone up and down. Now, in the last 3 months, the fund like the ARK Innovation ETF has underperformed. It's fallen because although it fell from February to that March low that I mentioned this year, 30 odd percent, it's recovered a bit, but it's still down. So you see that pattern of 175% up in a year, but over 3 months, it's in negative territory. And similarly, it's not doing so well over 1 month. Now, that's a very unusual pattern. So go and try and find a fund that has a similar pattern of very strong 1 year, not so good 3 months, and perhaps not so good 1 month. So the 3 months being negative. Now, very quickly, what happens if you rank it over the 1 year performance, you've picked the top funds, you can see them, and you scan down, and on TrustNet, for example, you can choose the columns that you have: 1 month return, 3 months return, 6 months. You can choose what's displayed. You just want to look at something that's got a similar profile in terms of the returns that it's achieved. Then at that point, when you've got it down to a handful of funds, you can start clicking into them, and that's when you start looking at their top 10 holdings. So you want to go and see where there's a Tesla in there, because Tesla is one of the biggest holdings in the ETF, that the ARK Innovation ETF. Similarly, the fund that you're probably going to be looking for that emulates it is going to have Tesla as one of its biggest holdings. Now, I have not found a free tool out there that will allow you to just scan by holdings, that you could just therefore find a fund by saying, I want Tesla in it, I want Zoom in it, I want Shopify, and then go to the top 10
why doesn't that exist? It sounds to me that is something that should be available.
Because that's the money, that's the gold that people want. You have to pay for it. The tools exist and they pay, and it's the tools.
Oh, okay. So it's available, but it's not.
Yeah,
free.
so we use it internally at Money to the Masses. We pay for tools that allow us to do that, and it's part of the analysis that we do, that why people like 80/20 Investor, we could do a piece, for example, that told you the exact funds. And this question came via 80/20 Investor, and I explained how they would go about finding a fund and suggested a couple that are very much like the ARK Innovation ETF. If you're going to use Morningstar, then you can get a little bit more nuanced. There's a equity style box that they have. If you visualize it, it's like a noughts and crosses grid. And then in the top corner, right-hand corner, it's growth, and it goes from growth down to the left to value. So it's growth, blended, and value. And then the grid goes on the vertical sort of axis from small caps, medium caps to large caps. So if you colour in one of the grid, it will give you an idea that it's a growth fund that invests in large cap stocks, which is effectively what ARK does. So you can go and use the screening tool on Morningstar if you like Morningstar. You pick on their fund screener only funds that fall into that box on that equity screen. You can then choose to only have funds that are in particular sectors. You can also screen it by return. So you can do the similar thing, and then you get a shortlist. But then once you've got your shortlist, you then will be able to go and dig down and compare them more side by side by looking at their fund fact sheets, which everybody has access to, and you could do that via your investment platform. What happens is you start to notice trends, okay? And you'll notice that particular fund houses, for example, will probably invest in very similar ways across their fund range. I'm not going to give a particular fund away, but if you go and look at Baillie Gifford, there's a massive hint there. I don't want to be accused of giving financial advice on the podcast, but Baillie Gifford do favour growth stocks in a lot of their funds. And if you do what I just did, explained, and you will find a bunch of Baillie Gifford funds in the global sector that do have a similar profile, not identical, similar profile in terms of investing in very large cap technology stocks around the world, and have had very strong rallies and very strong periods of underperformance, particularly recently, that you could invest in. And equally, there are investment trusts that do the same, and they use leverage too. So they really can ramp up their returns to be more like the ARK Innovation ETF or emulate the losses. And again, it's a sister fund from the Baillie Gifford stable that is the one that's most likely to be the one that people would like. So I'm not going to say the funds. I don't want people thinking I'm recommending them. It won't take a lot, if you, from the clues I've given you, to go and be able to do a bit of research and find the fund and the investment trust that perhaps is in the ballpark in terms of risk and return as that ARK Innovation ETF. But what I want people to take away is that you find the funds, you look at how they're performed, find odd periods of performance that make them stand out as a fund. This is the one that you're trying to emulate. Then find other funds that have done the same thing in that same odd period. And we've had a few of those this year. So you've got a good sample of periods where you could look at how funds performed. And then you find the ones you want, look at the top 10 holdings, and then next step is go and chart them against each other. Most of the platforms, most of the tools that I've mentioned will allow you to chart one fund against the other. You can't do it with funds that are overseas, unfortunately, not most of them anyway, because they're in different investment universes. But if you've got two funds in the UK, you want to find an alternative, then you can chart them and you'll be able to see that there's a correlation between their actual movement. So there you go. That's how I would go and solve a problem like ARK.
Okay, so moving on to the final piece of the podcast, and we're talking about state pensions and the fact that there are over 200,000 women that are, well, let's just put it as it is, that are being robbed.
Yeah, effectively. There's no nice way to put it, because there are over 200,000 women, as I mentioned in the intro, who could be in line for around, on average, £13,500 worth of underpaid state pensions. And this goes back to 1992. So what's happened is there are people who have been paid a pension typically. So if you're listening to this podcast and you may not be a female taking their state pension, but if you've got a parent or grandparent that you know who have said to you, yeah, I don't get hardly anything for my state pension, I get about £1 a week. They are the people who this is likely to affect, because typically the average person who has been affected by this gets around about £1.24 a week as a state pension, which is obviously unbelievable. Now, what's happened is it relates to the old state pension. So before April 2016, if you retired before April 2016, then you would have been retiring under the old state pension. And under the old rules, married women who had a poor contribution record for their state pension in their own right, so they would have a very small pension, they could claim up to 60% of their husband's national insurance contribution record. They could have their basic state pension instead based on 60% of their husband's national insurance contribution record. So that would obviously be a larger amount. However, the problems occurred because some were not automatically increased when they should have been, and there were certain rule changes that occurred back in 2008. I'm going to just read this out because these are some of there's 4 groups effectively that people can fall into. And they are people who are married or in civil partnerships who reach state pension age before 6th of April 2016, who may be entitled to a category BL uplift based on their partner's national insurance contribution record, which is effectively what I just mentioned. There are people whose spouse became entitled to a state pension following a change in the law in 2008. Some people should have had their basic state pension automatically reviewed and uplifted, but they weren't. There were people who had been widowed and their state pension was not uplifted to include any amounts that they were entitled to inherit from their late husband or wife or civil partner. And there were people who had not been paid category D state pension uplifts as they should have been from age 80. So there's a set group of people. But for me, I think the easiest way to look at it is if you're being paid a very small amount, particularly that £1.24 number, then you should be getting in contact with the Department of Work and Pensions. Now, this has been admitted to by the government knows about this, and there's been funds put in place to rectify the solution. And I mean, there are people entitled to £61,000. We're talking like big sums, and especially for people who are elderly, that's a significant sum of money. Now, the Department of Work and Pensions know this problem exists, and the government is setting aside money to rectify it. And apparently over the next 5 years, there are 100 civil servants who are working trying to rectify this problem and contact people and give them the underpayments. There is a question of whether interest is going to be paid or not, but the way I see it is that are you going to wait around for 5 years and hope that you might get it, especially if you're elderly? I say contact the Department of Work and Pensions and find out. Other people who have done that have found out that they were underpaid. That's how some of this has started to come to light. So my view is if there's somebody in your family who has mentioned something like this and not getting paid, we're going to put links to some stories in the show notes that people can go and read for a bit more information on it, and then they can take it from there and lodge a claim. Oh, and one final thing, if you're not obviously a female that's retired, this could even could impact anyway. For everybody out there, don't forget you can check your state pension forecast as long as you've not retired. So you can see what pension you're going to get, and therefore you can take action if you need to, if there's a bit of a shortfall. So if you want to do that, then go to the gov.uk website. It's gov.uk/check-state-pension. So if you want to do the Damien's Money MOT as well, then we talk about all of this in the MOT if you haven't already done it. So there we go, Andy.
And just quickly, while you're talking about that, Damien, I might as well mention the address for that. It's mot.moneytothemasses.com. Just a couple of minutes, few questions, and you could get yourself a grade and compare yourself to the thousands out there that have already done it.
Yeah, and don't forget, before we wrap up the show, please do leave us reviews. They make our day. I know there were a lot of you who took part in our survey. We're doing an annual survey on Money to the Masses now, all about things like the podcast, the website, 80/20 Investor, the newsletter, getting your feedback, and so we can improve it and give you more of what you love. And there's been some great comments via that piece of research, but do leave reviews on whichever podcast app you use for Money to the Masses. And we had somebody write in and claim a free mug, because do you remember, I think it was last week, the week before, we read out a few reviews and said whoever had done them, write in and we will give you a mug. And so there are mugs winging their way around the UK as we speak, Andy.
They're flying out of the office. So be one of those people. If you want to contact Damien, you could do so in the usual way. It's Damien@moneytothemasses.com. Don't forget our YouTube channel. Simply type Money to the Masses into YouTube. You'll find our channel. Subscribe to that. And finally, our Facebook group. There's well over 3,000 members in there. So get yourself involved. It is facebook.com/groups/Money to the Masses. And we're done.
And we're done. Until next time.
Until next time.